So in topic 10, we're going to go over strategic cost management. So this is an overview or the introduction for this topic. So when we look at the cost of things, it's much more than just the initial cost, right? It's much more than the purchase price. The purchase price on the screen here, you can imagine that is the iceberg that's above the water. It's a very small amount. But when we look at the other costs associated with our purchase, that's where the bottom of the iceberg comes in, especially if you're buying something large. Let's say a home, a building, equipment, a vehicle. All these things have different costs to them that you will experience over the lifetime of that item. So we usually go over a 5-year cost to own. So this is when we own it, these are the costs that are associated with it. So if we bought a car, we would have the added expenses of fuel, insurance, repairs, maintenance, financing, and even state fees because you have to have a license plate, right? So these are all out-of-pocket expenses. But then we need to add in the loss in value of that asset. And if it's a car, you're not going to be able to sell that car for the original value that you paid for it, right? So that gap is called depreciation. So some people will look on Kelley Blue Book to find the current value of a car, and you can take your price minus that current price, and that's your depreciation. If you're in the business world, accountants have 5-year depreciation, 7 and 10-year depreciation, depending on the asset. But these out-of-pocket expenses and loss in value, adding all that together is, over a period of 5 years, is the cost to own that item. So if we use an example such as a 2015 Honda Accord, we'll go with the LX sedan 4-door model. We have these out-of-pocket expenses that we can expect. So fuel, nearly $8,000. Insurance, $4,300. Financing, $1,200. State fees, $1,900. Maintenance, $1,900. And then repairs, about $2,000. So a total just above $19,000 is what this car is going to cost us over the period of 5 years. So you can think of that as it's costing you about $4,000 a year above the purchase price. But then we have to add in that loss in value. So if you bought the car for $30,000 and you can only sell it for $17,500, you got roughly a $12,500 depreciation there. So we take that depreciation, add all those out-of-pocket expenses, and we come up with the number here of 31,000 miles. Then we have some assumptions here that we're going to drive 15,000 miles a year, that we have a loan on it that's 2.48 annual percentage rate for 5 years, 60 months. And then we have a down payment of $2,126.70. So when we consider all of that, we're looking at about 43 cents a mile to operate that vehicle. So I hope that gave you an idea of all these extra costs. Now, what if we had a hybrid? A lot of people are looking at the hybrid vehicles nowadays because of gas mileage. So here's a Honda Accord hybrid. So it's a base model in sedan 4-door. So fuel dropped down. So it's now $5,000. Insurance, $4,000. Financing, $1,600. State fees, now this went up, $2,500. Maintenance stayed about the same at $19,000. And then repairs at $20,000. But overall, it came down a little. So our total operating cost of this vehicle is $17,000 and change. But our loss in value changed also. So here we can look at the depreciation. So, our original purchase cost minus what we're selling it for. So in 5 years, our depreciation is $16,914. Add those two together, $34,393. Roughly the same numbers for our assumptions here. 15,000 miles, our APR, 60 months, down payment. So basically this vehicle cost us 46 cents a mile to operate. So a little bit more to operate this vehicle, but you see where we're going with this. We're actually calculating everything else. It's more than just the price on the sticker. So when you're looking at purchasing items that are going to be around for a long time and have additional costs such as maintenance and all this, you have to consider these too. Can your company afford them? Can you afford them? So I'm looking forward to this topic. It's a wonderful topic to dive into because it's going to open your eyes to things you may not have considered before. So let's dive right in.